Good morning, Bitcoiners. Welcome back to your economic calendar, the information you need to start the week of right in Bitcoin. As always, I'm Mauricio here at Ledn, and today is Tuesday, February 28th. In this week's issue, we're covering three things impacting Bitcoin markets. The first one is not so decentralized finances. Last week, a court in London, England, ordered the software developer of a non-custodial wallet built on a DeFi protocol to move assets from one address to another to help recover funds from a hack. The move was done, the software developer / protocol complied, and we're looking at what this could mean for decentralized or non-custodial services on DeFi going forward. The second topic we're going to dive deep into is the Coinbase earnings report, where we got two very interesting takeaways that can show us what or where Coinbase revenues are coming from and where are consumer preferences as of fourth quarter of last year. And the third thing we're going to talk about is the Fed versus everybody. When COVID came, the Fed dropped rates faster and more aggressively than anyone else. And right now it's in a position to raise rates faster and more aggressively than anyone else. And we look at what that could mean for markets. So grab your coffees. It's going to be a great one. And as always, let's take a quick look at Bitcoin's performance last week before we get on with today's analysis. We see here that last week, Bitcoin dropped by almost 3%, closing at 23,556. Now, importantly, we see that the US dollar did a pretty big rally last week, rising by 1.33%. And this put pressure on both Bitcoin and equity markets. Let's go back to Bitcoin and open this up on the daily so we can better appreciate some of the things we're going to talk about right now. So from a technical standpoint, Bitcoin tried to overcome this 200-week moving average. You see this here on the orange line. And we see here that it tried to surpass this 1, 2, 3, 4, 5 trading sessions. And it was effectively rejected every single time that it tried to overcome this technical resistance. Now, from a momentum perspective, the data still looks pretty positive for Bitcoin. We're not seeing any significant buildup on Bitcoin short interest. This is, again, the short interest on Bitfinex, which is a good benchmark for overall short interest. We still see that it is at near historical lows in terms of short interest. And the shape of the Bitcoin futures still continues to show a healthy contango. As you can see here, the prices for future delivery are moving further or upwards and to the right, which means that the further out the delivery, the higher the price, which is typically seen as a very healthy shape of the futures curve. Now, going back to Bitcoin and in terms of key technical levels that we are watching, we are continuing to monitor this 200-week moving average as potential resistance to the upside. That is at around $25,000 even, 25,076. And to the downside, we are looking at the potential technical support of the 200-day moving average, which is currently at around $20,000, which again coincides very nicely with the historical high of the 2017 cycle, which should act as strong support should we get to test those levels. Now, onwards with our analysis for today. And now let's dive into the first point that we want to touch on today, which is titled Not So DeFi. Now, diehard decentralized finance proponents have a popular meme, which is code is law. And this saying became popular in decentralized finance circles over the last few years, alluding to the fact that no regulator or authorities could intervene in the decentralized finance or self-custody world. Now, last week, the same proponents found out that law is law and that code is just one more instance where the rule of law applies. Let's give some context to understand what happened. Last year, a hacker found an exploit in the wormhole bridge. Now, a bridge is just a fancy name for a decentralized exchange where users can exchange assets from one blockchain to assets from another blockchain in a programmatic way. Now, the hacker then used this exploit to drain over $308 million worth of assets. He then transferred the stolen funds to a non-custodial DeFi wallet developed by a group called Oasis. And for clarity, Oasis was not involved in any way in the hack. To give some reference to the hack itself, this is the news from almost over a year ago, showing that at the time the assets taken were valued at around $320 million. This is the article here from TechCrunch. Now, it turns out that the non-custodial wallet that this hacker sent the funds to had built a backdoor for it, quote, in case the software got hacked and it had to intervene, end quote. Then a group of white hat hackers discovered the backdoor and realized that it could be used to take the hackers' funds away. Then the white hat hackers alerted Oasis, and a London court ordered that the backdoor be used to transfer the assets from the hacker's wallet to a wallet that had been designated by the court. What does this mean? On the positive side, this means that some legal systems could provide some levels of protection to DeFi investors. Now, on the flip side, or the negative side, is that it goes directly against this whole decentralized nature of DeFi, and it highlights just how few projects are truly decentralized in nature. Now, the second point that we want to touch on today is a deep dive into the Coinbase earnings report and sharing two very interesting takeaways or insights that we got from this report. Now, there are many insights that can be drawn from the Coinbase fourth quarter earnings report, but in today's dispatch, like I said, we're going to focus on two. And these are focused around types of investors and their activities, as well as consumer interests in different assets. So the first insight is that despite its large institutional presence, Coinbase lives off of its retail clients. Institutional trade volume represented 86% of their transaction volume at $125 billion, but only generated $13.4 million in revenue, or 4% of Coinbase's total revenue for Q4. This means that, on average, Coinbase charged its institutional clients around 1 basis point per transaction fee. Conversely, retail clients represented 14% of Coinbase's transaction volumes at $20 billion, but contributed 96% of the revenues at $308.8 million. This means that on average, Coinbase charged its retail clients more than 1.5% per transaction. For comparison purposes, that is equivalent of charging retail clients more than 100 times more for the same transaction versus an institutional client. The second insight that we got from the report is that 64% of Coinbase's transaction volume or revenue came from Bitcoin and Ethereum trades. The remaining assets that it supports, which it supports 198 of them, brought in only 36% of the revenue for the fourth quarter. Again, for context, Coinbase supports about 200 assets right now, meaning that Bitcoin and Ethereum are driving 32% each respectively, 64% combined, and that on average, the other 198 coins represent the 36% delta, which is an average of 20 basis points of revenue on average per asset, additional asset that they support. The third point we're going to look at today is the Federal Reserve versus everybody. And for that, I'm going to get into the chart on your screen in a second. When the COVID pandemic brought the US economy to a standstill in March 2020, the Federal Reserve jumped into action. It lowered interest rates to 0% and injected all sorts of liquidity directly and indirectly into the US economy. At the time, other countries were not so prompt to loosen their monetary policy, and this resulted in the US dollar weakening disproportionately relative to others. And during the second half of 2020, everybody wanted to short the US dollar. And this is exactly what we mean here. The orange line is the overnight funds rate for the Federal Reserve, and the green and red line is the US dollar index. As you can see here on March, this was late February, early March, they announced the rate cuts to 0. And this is effectively when the US dollar started going down a cliff for the second half of 2020. And that's the first part of the analysis that we wanted to highlight. Now, by November 2021, the US economy was running so hot that the Fed announced that it would start tightening economic conditions by raising interest rates in an effort to contain inflation. By this point, the rest of the global economy was still reeling from the effects of the pandemic and was not in a position to tighten monetary policy as much or as fast as the Fed. This led to a massive rally in the US dollar index after November 2021, up until October of 2022. And this is exactly what we are talking about here. This is when the Fed announced that it would start raising rates. The orange line, as you can see, starts ramping up, and the US dollar index, no surprise, starts ramping up right along with it. Now, as I mentioned, the chart on your screen highlights those two trends and how they played out. And to illustrate this further, I wanted to show you a chart that highlights the overnight lending rate in the US compared to a few other countries. I'm going to pop that up in a second. Okay, so on your screen, you have the overnight bank funding rate of the United States. That's in the deep blue color. Then you have the Japanese bank lending rate in orange and the European bank lending rate in teal, which are roughly the equivalent for these other two central banks. Now, as you can see, notice how the United States, or the Federal Reserve, was able to cut interest rates by a much wider margin than everyone else when the pandemic started. And conversely, it has been the bank or the central bank to raise interest rates the most and the most aggressively now on the run-up in an effort to cool down inflation. The United States is the only central bank right now that looks to be in a position to raise rates as fast and furiously without breaking something in its economy. And to give a few other examples, the Bank of Canada and the Bank of England have both signaled that they will be taking pauses from further interest rate hikes, while the Fed is very clearly still on a path to raise further. And this has some economists talking about how important it is to pay attention to what central banks around the world are doing. So I guess the question becomes, where do we go from here? Now, as investors come to terms with higher for longer interest rates, this has sparked a rally in the US dollar. For context, over the last 4 weeks, the Chinese yuan has lost 3.3% of its purchasing power versus the US dollar. And the Japanese yen has lost more than 6% of its purchasing power versus the US dollar in the same time period. Now, as central banks around the world keep tapping out from raising interest rates further, and the Fed keeps going, this will likely keep strengthening the US dollar until the Fed signals that it has stopped or it is reaching its terminal rate. This could deliver a rally in the US dollar index in the near term, could deliver near-term pressure to asset prices, including Bitcoin. And as always, we wrap up with what's ahead for the week. The week ahead will be loaded with Fed speeches. We get 6 of them throughout the week. We'll also get important economic data and corporate earnings that are relevant for Bitcoin. On Wednesday, we will get corporate earnings from Bitcoin mining manufacturer Canaan. And the biggest news for events, or the biggest day for news and events, will be this Thursday when we will get inflation data and unemployment data for the Eurozone. And inflation is expected to come in north of 8%, which could have a big impact in markets. We will also get a speech from Mr. Neil Kashkari, the Minneapolis Fed president, who often mentions stable coins and Bitcoin in his speeches. The details for all of these events are on your screen, and you can also see them on our blog and in the email that you will be getting in your inbox. It should be in your inbox already. With this, we have reached the end of today's show. If you liked it, if you learned something, I welcome you to thumbs up it, like it, share it with your friends, subscribe to our channel. And if you don't yet have a Ledn account, I welcome you to check us out at ledn.io and learn how we can offer you the world's best Bitcoin-backed loans, as well as some very cool products for earning interest on your USDC and your Bitcoin. Thank you, everybody. Have a wonderful week y los quiero mucho.